Have you ever logged into your super account and seen words like balance, conservative, and growth and thought, what does that actually mean? Well, it all comes down to something called asset allocation. Basically, how your super is spread out across different types of investments. Think of asset allocation like making a smoothie. You throw different types of ingredients like banana, berry, and yogurts, protein powder, to get the taste and nutrition that you want. Super funds do the same thing, but instead of fruit, they use different types of assets. The recipe you choose changes the flavour. Now, what are our asset classes? First, we have shares. These are ownership stakes in companies like Apple, Woolworths, and Toyota. Shares have the potential for the strongest long-term growth, but they can bounce around a lot in the short term. That's why they are considered higher risk, but also higher reward. Often shares will still provide passive income from dividends and such as well. Now, let's move on to property. This is investments in things like shopping centres, warehouses, and office buildings. Property can give both steady rental income and capital growth. But it also moves up and down, depending on the economy and demand. Now we're on to fixed interest, or bonds. With bonds, you're lending money to governments and companies, and they're paying you back with interest. They're generally safer than shares and provide some stability, especially when the markets are having a rough time. Now we're on to cash. Cash is the safest corner of super. It's usually short-term deposits with banks. The trade-off though is that it doesn't grow much, often just keeping pace with inflation, but it does protect your money. Now we're on to alternatives. So some funds also invest in things like infrastructure. So think roads, airports, power grids, private equities, and even commodities. These add variety and don't often move the same as shares and property do in the market. So essentially, this can help spread your risk. Asset allocations and contributions are the two biggest factors that help shape and grow your super, even more than trying to pick the right stock in the market at the time. There are many different types of asset allocation options, so we have growth, balanced, and conservative, and these are made up of a different mix of assets, so some to keep you more conservative and safe and make sure you get a steady return. Growth, where you're in it for the long-term investment and not the short term. At the end of the day, asset allocation is about matching your super to your risk and goals. If you're younger, you might be more comfortable with a growth option because you've got time on your side. If you're close to retirement, you might opt in for a conservative or balanced approach, which focuses more on protecting on what you've already built. So when you check your super account next, don't just check the balance, take a look at the investment options too, because that mix of assets is the engine that's growing your super.